Tata Motors is the counter that we're talking about, and remember, there's a significant update that the company sent out, JLR specifically, Jaguar Land Rover, and you will understand. Let me very quickly tell you the context. Of course, you have auto tariffs that have kicked in, but Jaguar Land Rovers said that it's going to pause exports to the US to see how this is going to pan out. And we've got a question from Srinivasan, who's writing in from Indonesia. He's got 450 shares of Tata Motors at a price of 800. And there are a lot of people like that, Mr. Chokalingam, who bought into this counter for the long term, but it's gotten beaten down, and very significantly so. At this juncture, would you say that it makes sense to add to your portfolio? Would you book the loss, or would you hold on?
I would give a hold recommendation. Of course, the problems will be there, as you rightly said. It's going to be impacted. And on domestic front also, the commercial vehicles are not going to grow in double digit. And domestic front also, this PV business is not growing, enough to beat the competitor. And however, to be fair to the stock, it has crashed a lot. And I would say that it's a long-term hold, because in 1 to 2 years, it can definitely has a potential to come back. The tariff war also would settle down in a year or so. So therefore, it's a long-term hold. I would not recommend a buy. Maybe by any chance it falls another 5-10%, then one can consider buying the stock for long term.
And this is a stock that I will remind you fell to double digit at one point of time within the last 5 years. And at that point, when it did recover, it ended up being, in that particular year, I think it was 2023, if I'm not mistaken, the best performing Nifty 50 stock. You look at that rally, right? So from 2023 start to 2024, the kind of run that it had was very significant. The low point in the last 5 years was 67 or thereabouts.